Hi everyone, this is Brian Neal with TradeToBeFree.com. In this video I'm going to show you how to swing trade stocks with a full-time job, how easy it can be, and a very successful strategy for swing trading stocks while you work full-time. And using our strategies, you can actually put the orders in after hours and follow all the rules in our strategy. And I'll explain how that works and why it works and why this strategy is so successful. And today I want to show you one of the setups that we featured in our newsletter on our site that we have for TradeToBeFree.com. We've got a listing of all the setups that I'm looking at for my own trading for the coming days and weeks. This one I want to show you right now is PRAH, and right now the market's in a strong uptrend. It's a bull market, and a lot of these top growth stocks that you'll notice in the market, that you'll find in the market, are breaking out of these flat base patterns, and there's two good entry points out of these flat base patterns, which are basically sort of a rectangle or a box pattern on the chart. In this case, PRAH is a top growth stock and was breaking out, I believe, on Friday of last week. This was October 9th or Monday. Yeah, Monday. This was breaking out as of the close. So the flat base is basically just a sideways consolidation within a very strong long-term uptrend, and that's key. We want to see a very strong long-term uptrend with all the patterns that we trade, okay? And we can see PRAH is within that long-term uptrend. In fact, if we go and click on the chart in the site, we can bring up a longer-term chart, and we can see how it's done over the past year. And you can see it's been in this uptrend for about a year now. And after it was in the uptrend for quite some time, it formed this horizontal consolidation called the flat base. And we can see here it's breaking out and reaching the entry point by breaking above the top of the pattern. Okay, and that's the breakout point. All right, but I want to draw your attention to some of the other information that you saw on the site here down below the chart. Okay, we have a listing of all the reasons why we picked this stock amongst the dozens of stocks that are breaking out of flat base patterns at the time. And the reason why we focus on this stock is because it's a top growth stock. It has earnings growth averaging over 31% per year over the past 5 years, and they're expected to increase strongly in the future. Okay, and that's key. The return on equity is nearly 23%. That's a key growth stock characteristic you want to look at. Okay, and it's also a favorite metric of Warren Buffett. All right, so we want to see that high above 15% at least on most of these trading setups on top growth stocks. And sales are expected to increase 20% this year and nearly 19% next year. So you want to see at least 15% growth in sales now and in the future. Ideally, you want to see accelerating growth sometime in the recent past or heading into a quarter or two where the growth will be accelerating. So that's also key. All right, and basically what you do with this strategy is you get the newsletter, okay, you check it to see if it's broken out. In this case, it already had broken out, and so we noted that in the newsletter. And the entry point at that point is a move above the prior day's high, I believe in this case, and you can put a buy stop order in after hours. So you get the newsletter, you see it broke out, you put in a buy stop order after hours after you come home from work, okay, so you don't have to watch the stock all day long and play these micro moves that a lot of people play throughout the day, and those are less reliable. In many cases, they're less reliable, and we don't want to mess with the day trading noise. We want to get the big move out of a strong consolidation on a top growth stock, and that's what this strategy is all about. So, typically what you do is you enter once you see the breakout. You want to see the breakout on stronger volume, and in this case, we have it here. What you often have is a initial move higher, so maybe it goes up 4 or 5% or so. The price often pulls back. It'll test the top of the breakout area, okay? The top of this candle right here, all right, which defines the top of the flat base pattern in this case. So maybe you get a move back to touch that area or a little below that. Then you get a gap higher, what we call a candle over candle pattern, okay, and a strong move above that the next day, and that could be a secondary entry point. And you very often see that, when you see a strong breakout on a growth stock in a bull market like this, okay. So basically all you do is you put that buy stop order in a little above the prior day's high after the breakout. You put in a stop loss order about 7% or so below the entry point. In this case, you could drop it down below this point here, okay, and then go for at least 15-20% profit on this within a few weeks. And very often we'll get that. Sometimes we won't, so we have to have that stop loss in place. But if it's in a very strong uptrend, if the fundamentals are still improving, if we have rising estimates, it's beating those estimates, okay? We saw that strong growth. It's not slowing down or not slowing down much. Ideally, it's accelerating as it's breaking out. And you can put all those orders in after hours. In fact, what you want to do is put a target limit order in for your target sell price. In this case, it might be, $96, $97 in that range, okay? And then at the same time, you can put a stop loss in with most brokers below the low in the pattern here, in the consolidation pattern, the prior low on a daily chart. Okay, so you have these rallies here and this rally here. These are all short-term uptrends. Okay, this is a short-term downtrend here, short-term downtrend. Okay, that short-term downtrend will define a low for you. Okay, and you can put a stop below that prior low in the trend. Now in this case, we have an extension quite a bit from the prior low, so we may see a pullback, and we may see it touch the top of the prior consolidation here, or maybe the 10-day moving average or 20-day moving average before another move higher, most likely. So that is a very good trading strategy. Again, you want to focus on the top growth stocks, like we feature in the newsletter. If you work full time, you don't have to be there during the day. Okay, you don't have to jeopardize your job by trying to trade at work, which is really not recommended for anybody. If you're working, you need to focus on work. And with this strategy, you don't have to be there during the day while your order executes. It'll execute automatically for you. And then, when you get a chance at lunchtime, you can put in your stop loss order below the prior low on the daily chart here, okay, along with your limit order for your target sell price. Now, if you're using Robinhood, you can use Robinhood with this strategy. You just can't put the limit order in for your target sell price and your stop loss in at the same time. So, be aware of that. And, if you do Schwab or Fidelity or another major online brokers that have dropped their commission prices recently to around $5 per trade, you can use those brokers and put in that one cancels the other order for your limit price and also your stop loss price. So that's how you can trade and do very well during a bull market without jeopardizing your day job and while pursuing your career, which for most of us, we should do. And, we'll have another stream of income coming in on a trading strategy that actually works. Okay, so you don't have to mess around with the noise during the day and try to scalp penny stocks and play the whole pump and dump game, which is tough to do and tough to win at as it is. And with this strategy, you can make some money and do really well. Do it with a full-time job. So if you want, you can check out our site at TradeToBeFree.com. Sign up for a 3-week free trial of our newsletter. There's no credit card required for that, and you can see how well each of these stocks has done since it's been featured. And I think you'll be really impressed. And if you compare it to other strategies out there, you'll realize that focusing on these best stocks in the market, on these well-formed patterns, and a breakout of those patterns and strong volume, you'll see that in a good bull market, this strategy will do very, very well against most all strategies, and you can still work a full-time job and do very, very well. And that's the point of this video. You don't have to use options and take extra risk with that. You don't have to play penny stocks and take that extra risk. You don't have to use margin, and you can still do very, very well. In fact, we also have a second strategy on InvestBeFree.com that requires only 15 minutes per week, and it's now around a 10-bagger in just over 5 years, about 5.5 years. It's a 10-bagger now before commissions and fees. And you can go to InvestBeFree.com and check out that strategy too. And I'll put a link down below in the comments section to learn more about that as well. So the message of this video is you can do very well while you're working a full-time job. You can quit your job when you're ready. And in the meantime, make money instead of being frustrated with trading penny stocks where there's so much slippage, and if you're not in it before the pump, then things often don't work out well. This is a strategy focusing on stocks with fundamentals that are improving, rapidly improving, real results to support a higher price. So, okay, well, thanks for listening, and check out the YouTube channel too for other videos, and leave a comment below, and check out the free trial too, again with just your name and email address, and we'll give you 3 weeks free. Thanks for watching today. If you liked the video, give it a thumbs up below. And be sure to tap my image here to get notified when our next video is published. And if you haven't yet, tap here to get our top 2 trading opportunities for the coming week emailed to you. Stocks with the right technicals and fundamentals to make a big move higher. And if you want to learn one of my best strategies, tap here and you can learn how to do it yourself.